What's up guys, this is Muhab, and in this video I'll show you my top 3 stocks that I don't mind buying and holding for a long period of time. I am personally a shareholder of all of the 3 companies I'm about to mention. In fact, these 3 companies represent 60% of my portfolio. Yup, you heard that right, 60%. So almost 2/3 of my portfolio is made of these 3 stocks that I believe will keep on growing for a long period of time. The way I chose these stocks was mainly based on disruption. A stock can only grow double digit for more than a decade if they can genuinely change the consumer behavior and make his or her life easier and more efficient. So rather than taking more of the cake, you make your own cake and own all of it. For example, in 1908, the automobile, oil and plastic industry revolution led to extraordinary growth in the economy, and as a result, many companies and people's wealth grew exponentially. This includes the great Warren Buffett, who made a good portion of his money investing in oil companies like ExxonMobil. This is mainly because automobile gave freedom to people to travel large distances easily. Oil made energy easily accessible and less costly to power steam engines and factories, and it supported the growth of the United States economy. And finally, plastic, which allowed us to make toys, bicycle helmets, car airbags, and much more stuff at a very cheap price, which made them accessible to everyone. These drastic evolutions made life more comfortable and easy. As a result, it changed the consumer behavior from driving a horse to driving a car, and from burning wood to burning the energy-dense oil. There are many more examples I could give, from the age of steam, coal, iron and railways back in 1829 to the current age of computer, data and artificial intelligence. However, let's now focus on the future. In 10 years, what companies will dominate different aspects of the future industries and why? Let's talk more about the 3 companies I believe will disrupt and are currently disrupting their industries. The list will go from the most to the least risky stocks, but as always, before we talk about the stocks, make sure to grab your cup of coffee and let's roll the intro. Unsurprisingly, we'll start with Tesla. I mean, if Tesla wasn't in the list of the most disruptive future companies, then there's either something wrong with the video or it's probably made by CNBC or something. Anyways, Tesla has tons of potential leverages and industries it's planning to disrupt. You got electric cars and trucks, solar energy, autonomous driving, autonomous ride hailing, Tesla insurance, and probably many more stuff that is still not revealed yet. Maybe they'll start distributing batteries to other car manufacturers to make quality electric cars. Or maybe they'll start selling their gigafactories and, sell the machine that builds the machine. With all of that, Tesla is considered to be one of the most disruptive companies in the future. Cathie Woods, the CEO and CIO of ARX Investments, which manages $11 billion worth of assets, expects the stock to go as high as $15,000 by 2024. $15,000, that's 30x its current price in 4 years' time. According to her model, worst case scenario, the stock should double by 2024, reaching a price of $1,500. Her most likely case is for the stock to reach $7,000 in 2024, and that's more than 9x in 4 years' time, which is extraordinary. However, bear in mind that Cathie Woods is the most optimistic person about that stock, and many people don't believe it's gonna go as high as that. However, I just want to show you the extreme end of what people think that stock price could reach, because this is a disruptive stock with a lot of potential, so it's really hard to predict its future accurately. The only way to tell if Cathie Wood's numbers are going to be right is to wait until 2024 and see if they're actually right. That's the only way you can guarantee whether she's right or wrong. Now, on the other hand, just 2 to 3 years ago, many analysts genuinely believed the company will go bankrupt soon. Looking at this now, that's very silly, and it's highly unlikely they'll file for bankruptcy even with the current health crisis. Currently, the lowest forecast for the next 12 months of stock I can see is $240. So as you can see, the range of forecast is extremely large for the stock, and that makes it one of the riskier growth stocks to invest in. And that's why it's the first stock in the list. But in my opinion, it's very unlikely the stock price will drop to $240 anytime soon. I made a whole video a few months ago discussing whether Tesla can handle a recession in 2020 or not. Surprisingly, it turned out to be a great timing for the video considering what's happening right now. Feel free to check the video out, it'll be in the description below. Other than that, many analysts believe that the company's stock price at more than $700 is priced at perfection, which means that this price has included all or most of the growth that the company should experience. So if the company failed to deliver its high expectation, the stock price could fall even if they achieved something extraordinary by normal standards. Finally, some believe that Tesla is just like any other automobile company, and with a forward PE ratio of 131, the company is way overvalued. Now, what's my opinion regarding all of this? Well, I believe Tesla could potentially disrupt many industries and grow exponentially. However, with the current price of more than $700 and it's now really close to $800, I think the stock priced in most or all of its growth from electric vehicles. However, if Tesla robotaxis and solar energy sectors worked out, the company should be worth much more. Personally, I was lucky enough to buy Tesla at an average price of $233, and at that time, Tesla was my largest position in my portfolio. I sold some when it went to the $700 to $800 region because the stock was dominating my portfolio, and now it's the third largest position, and I still believe Tesla has a great future in front of it. I placed this as the first stock in this list because I believe it's one of the more volatile and risky stocks. Electric cars represent less than 5% out of the all vehicles worldwide, so it may end up being a fad, especially with the huge drop in oil prices. Worst case scenario, Tesla may end up being just like any other car maker, but the best case scenario for the company is extraordinary. I would like to conclude with two things. First, if you're planning to buy Tesla stock, buy it with caution at the current prices, as the downside looks stronger than the upside in the short to middle term. Second, I urge you to watch the video I made about what will Tesla stock be worth 3 years from now. It'll help you see Tesla's future potential in detail and will hopefully help you in deciding whether it's worth buying the stock for you or not, or at what price it's worth buying the stock in 2020. In the second position, I was thinking whether to put Alibaba or Amazon, and to be honest, both deserves to be in the second place. They're both disrupting the retail industry, just in different regions. As a result of the current illness, many people started shopping online using Alibaba and Amazon. And don't get me wrong, the price of both companies reflect that growth. Alibaba raised more than 15% from its bottom, and Amazon is at its all-time high. What's a bit concerning is that people at these times only focus on buying the essentials. So even though there is no doubt that more people are shopping through Amazon and Alibaba, the spending may have dropped significantly. Anyways, Amazon will be releasing their first quarter of 2020 in the 30th of April. It'll be interesting to see how it did in the past quarter. On the other hand, Alibaba Q1 earnings is expected to be released by the 20th of May, so it's still far ahead from now. However, if you look at the larger picture and the long term, many of these customers who got used to shop online will keep on using Amazon and Alibaba, and that will accelerate the increase in number of users and potentially Amazon Prime members in the future. Even if you don't consider the current recession, it is forecasted that the e-commerce market will grow significantly in the next few years. The current recession just accelerated that growth. Amazon and Alibaba's revenue is expected to grow from 15 to 35% annually in the next few years, which is really great. I mentioned Alibaba as one of my top 5 growth stocks that I'm buying in April of 2020 market crash, and I talked more about it in detail and why I think it's a great stock to buy. I looked over the cash, PE ratio, PEG ratio, price to book ratio, and many other factors. Feel free to check the video, I'll leave the link for it in the description below. Also bear in mind that both companies have many other sources of income other than retail. In fact, Amazon's main source of net income is from Amazon Web Services, and a significant part of its income comes from advertising, Alexa, and other services that it provides. Alibaba also makes income from cloud computing and digital media. However, when it comes to which is better to buy, Amazon or Alibaba, it really depends on many factors and it will require a video on its own. If you're interested in me making a comparison video between Amazon and Alibaba, feel free to write down in the comments below and make sure to like the video too. To conclude, Amazon and Alibaba have revolutionized and are still revolutionizing the way we shop. The idea of going down to a store and buying something from there won't be the norm in the near future. Finally, one of my favorite stocks in the stock market, Facebook. And to be honest, if I explained why I think Facebook is a buy, I'll just be repeating myself. Not only I mentioned why it's a buy in the top 5 growth stocks I am buying in April of 2020, but I also made its own separate video of why I am all in on Facebook. And I made the video when the stock was more than $200. The stock is now at $190, and in my opinion, I see this as a strong buy. Facebook represents almost 25% of my portfolio, and the only reason why I'm not adding more is because I don't want it to dominate my portfolio. If you're interested in more details of why I think Facebook is a buy, I urge you to watch why I am all in on Facebook, and if you have more time, feel free to watch top 5 growth stocks I am buying in April of 2020. If you made it to this point of the video, then I think I should give you a gift. And that gift is showing you all of the stocks I own in my portfolio. I'll make sure to leave a link in the description below for you to check my portfolio out. Alright guys, that's the end of the video. If you enjoyed it, feel free to like, share and subscribe. If you have any questions, comment them down below and I'll reply as soon as I see it. Thank you for watching. This is Muhab and I am signing out.